So let's start with AT&T.
Okay.
It's a name you don't like for any
No.
number of
I
reasons.
said I don't hate it anymore. I just don't find upside. But David,
there is a
I
little
will
bit
give
upside
it to you.
this morning.
Yeah,
Still
David,
a
I'm going to
widely
give you
stock. Obviously, it is
1.2 million wireless net adds is very good.
928,000 postpaid for AT&T, which is a strong number. In fact, far stronger than Verizon's number that we got a few days ago. We all know about the promotional nature of things, but AT&T, sort of the CFO telling me on a call earlier that it's not really as much about that. It's simply about what they say is executing better on wireless.
But David,
and taking share potentially.
That's the we have to talk about this 289,000 net adds in broadband. David, has it become just a free for all in broadband? Well,
they're going to. On the call, which I think is underway, they're going to be talking about their accelerating build out for fiber. Which, of course, then gets to the broadband.
I'm willing to say that's bullish.
That has weakened, as you know, shares not just of our parent company, Comcast, but as well Charter, and even more so, of course, the much smaller Altice. This idea that AT&T in certain markets is going to become a more formidable competitor as it overbuilds with fiber. And they say, at least, when they do that, they take share where they build.
Well, they have to by nature.
Yeah.
David, this is the nightmare coming true. And so we're all going to ask about who needs to do deals, whether this FTC will allow deals. This is arguably, I know this WeWork today, but this is arguably the most important earnings story out there. And I'm willing to give you that this is a better than expected quarter, and it is taking share from people.
Yeah.
And maybe it's not Dumb and Dumber anymore. My friend John Ledger was talking about that yesterday. But we've got Maurice Claret across the street. We have the whole gang.
Marcel Claret,
by the way, was being interviewed by another person.
Yes, he came down from the NASDAQ. It's amazing how he could do that, wasn't it?
Yeah.
We're here, but he came down.
It's Andrew, and
we love him.
Do treasure
we love him, but he's
David,
everywhere.
This is really important because I've been very negative on them, and I'm willing to say this is the bottom, and that the focus that they did here. I'd like to know how much was done with the subsidy. It also makes me feel like perhaps this is a clarion call for knowing more about Apple.
Interesting. And it may be. Now, we'll see. This stock, as you point out, Jim, you've been right to be negative on it. It's still down 10% for the year.
Yeah, but I'm not going to be.
Listen, it's going to be a far smaller company, AT&T. We can't say that enough, of course. Right. And their key contention for why they are jettisoning, so to speak, either splitting or spinning Warner HBO into Discovery is because they want focus. And so they're going to continue to talk about the fact that they are now going to be able to execute on a higher level as a result of the focus solely on the wireless business. It's a good quarter. By the way, though, I did want to turn to actually that name, Discovery, because take a look at how that stock has performed since the deal was announced. It's been nothing short of just horrible. And I think we have that chart as well. There it is. We're talking about a stock that's declined by over 28% since they announced the deal. And there just seems to be, because this is going to close, most likely perhaps even in the first quarter, but certainly the first half of next year. And there are a lot of investors who just don't want a part of it because they're worried about the leverage at the company 5 times. Remember, it'll be one of the largest media companies in the world. Obviously have a direct-to-consumer will be its primary focus, but it still has a lot of linear networks. And with 5 times leverage and linear networks, there still seems to be some resistance, despite what I believe, obviously many others do, will be strong leadership from David Zaslav and an increasing management team, that it's going to be tough. So, AT&T's jettisoning a lot there to create value, so to speak. 70% of this company is going to be owned or controlled by former AT&T shareholders. We'll see, Jim.
Well, look, remember, a lot of times we have to think about who the shareholder base is.
Yeah.
AT&T was for dividend with slow growth.
Right.
Verizon is for a little lower dividend, a little faster growth. T-Mobile up 5 yesterday because they've got the fastest growth. And we are in a market, David, where even though interest rates are low, the individual investor is addicted to growth, not dividend. Highly unusual. So the idea that maybe AT&T is on restart mode and we can start looking at it again is exciting to me. I'm excited about that.
Wow. Well, that's by far the most positive thing I've heard you say about AT&T since the deal was announced. And you were very, very angry, rightly
I was
so,
angry
perhaps, because you were misled on the dividend, period.
And I think misled's the right word.
Yeah.
I'm not choosing just the word dissemble. I think that's just misled. But when I look at this, I say, is it a star that's born? No. But I would say, wait a second. They're not an also-ran. But the whole group seems a little less investable if you're thinking that broadband's been the power.
And the name, the best name, so to speak, at least over any period of time, of course, has been T-Mobile.
Right.
And we haven't heard from that company yet.
No,
so
not
it'll be
at all.
interesting to see in terms of their postpaid net adds.
Siebert's been putting up good numbers.
Yes.
Not as promotional as Leisure.
No. They do have a different, and I might argue, a stronger culture in some way at T-Mobile, having seen it to a certain extent firsthand.
Shepard Smith here. Thanks for watching CNBC on YouTube.